JJ the CPA here. Hope you're doing well. The employee retention tax credit. Why is it getting missed? Why are you not taking advantage of it? Why are you not out in front of your clients telling them about this? Well, because it's complicated. Well, I'm going to uncomplicate it for you. I'm going to do it in two ways. First, I'm just going to plug it. I've got a tax seminar about the ERTC. I walk it through A to Z and how to file a form 941X in addition to that. But it is complex. But why is it not complex? Because if you had wages, you got a credit sitting out there. You got a check waiting to come back to you. You hear credit and you think it's just reducing down taxes. But because it's reducing down taxes that you already paid, i.e. payroll taxes, you're going to get a check back from the IRS. I have a client, they qualified in first, second, and third quarter of 21. Each quarter they got around $70,000. They're going to get $210,000 back from the IRS. How do you know if you qualify or not? In 2021, if your gross receipts are down at least 20% in any quarter, first, second, and third of 2021 compared to the same quarter in 2019, you qualify for that quarter. If you are 500 or less employees, all your employees are included. If you're more than a 50% owner, you're excluded unless you don't have any living relatives. So that is up to $7,000 per quarter per employee in first and second and third quarter, $21,000. When you're now looking at this credit and you're looking at, should I go after it? The answer is yes. Do not pay a contingency fee. It's actually illegal for someone to charge you a contingency fee. Do not pay it. It's fine if you hire somebody and you're going to pay them to put it together, and you're going to pay them potentially a flat fee or something that's based on their hourly, but it's going to be worth it, because if your gross receipts are down, which you should be able to figure out, take your quarterly financials in 2021 in first and second and third quarter, compare that gross to the same quarters in 2019. And if they're down at least 20%, then look at your Form 941, or what was your wages for the quarter. That potentially is your starting point. That times 70% of what your credit could be. Now it's a max $10,000 of wages plus employer paid health insurance combined. It's a max $10,000 per quarter per employee, but it's a 70% credit. So even if you have highly paid employees, that's $7,000 max per employee per quarter. If you have employees that they're not making, in essence, $10,000 a quarter, this adds up. 70% of payroll, no matter what it is huge. The thing is that you do have some time. The first due date of any Form 941X, which is how you go back and file for this credit to request a refund to get a check back in your pocket, is, you ready for this? July 31st of 2023. And that's only if you're then qualifying in first or second quarter of 2020. Point is you have 3 years from the date that Form 941 was filed. You don't even have to worry about that right now, unless we're coming up across the time frame of July 31st of 2023, but that's again just for the first due date. Long story short, do not put this aside. Ask your advisor. What I want you to know is this: if you are a business with your gross receipts down, it doesn't matter if you're essential, doesn't matter if you're non-essential, it doesn't matter if you had a governmental shutdown. There's a lot of confusion related to this. If your gross receipts are down, boom, period, you qualify. You get the check back. What's the drawback? Okay, this is not enough of a drawback for you not to go and get this credit. The drawback would be that whatever your credit is, you are going to have to reduce down your expenses for wages for whatever that credit is. Big deal. You still come out ahead. Just because it has a tax effect doesn't mean that you shouldn't do this. If your tax advisor indicated to you that you don't qualify, I want you to go back and just simply ask them one question. Can you tell me why? The reason I say that is that there has been a lot of misconception around this, and a lot of tax advisors that are helping you with your books and your income taxes are not necessarily keeping up with this. Why? Because it's related to payroll, and maybe they don't deal with payroll. So at the end of the day, don't just take no for an answer. Get an answer of why. And in essence, dig deeper. Quick story, somebody last year took one of my seminars. I'm going to give you a link to it. And they indicated that their advisor told them they didn't get it. They didn't qualify for it. And they ended up getting $1.2 million of an employee retention tax credit, meaning a check back to them. So get after it. This is still available. You're right. PPP, no longer available. EIDL, related to the pandemic, no longer available. The EIDL grants, no longer available. This credit is available on wages paid between March 13th of 2020 and September 30 of 2021. If you're a recovery startup business, you're right, you qualify for fourth quarter of 21. So check out my seminar, check out my playlist related to this, but know this. If you have employees and you've not seriously looked at this, you need to do it now. So thanks for tuning in. I'd love it if you'd subscribe. And then don't you ever forget, you've never met a CPA quite like me. Have a great one.
American CPA. CPA.